Welcome back, guys. My name is Angelo. The markets have been moving a lot lately. In fact, this may have been the best month I've ever had when it comes to my investment returns. Since many ETFs are now approaching or surpassing their previous all-time highs again, you may be wondering if investing into your favorite stock or ETF is a good idea right now, or if you should wait for lower prices before buying. That's exactly what I want to focus on today while taking a closer look at everything that happened to each of my investments, ETFs, P2P Lending and crypto in November, and any important events up to today, December 5th, 2023. Let's begin with stocks in the form of ETFs making up the large majority of the investment portfolio I share with my wife. These had an incredible month. Our main ETF, the Vanguard FTSE All-World, was up over 6% in November alone for a year-to-date performance of 13.66%, which I think very few people would have expected at the start of this year. In fact, our ETF returns will be even better if we were counting them in US dollars. A ridiculous 9.18% in November or 16.5% in total in 2023. The reason why our returns are a few percent below is because the euro gained 3% in value against the dollar. But the exchange rate moving up or down is completely normal, and trying to hedge against it doesn't make sense when investing globally. You may also be interested to know that this was the second best performing November in the stock market since 1980, so in 43 years. This once again goes to show you how much of a difference in returns missing a single month could make when you try to time the market, which is almost always a bad idea compared to just buying and holding long term. Let's see where our ETF portfolio stands in actual numbers as of December 1st. We're now sitting at 256,000 euros, gaining almost 14,000 euros in value last month alone, and 26,860 euros since the start of the year, plus 1,756 euros in paid out dividends. Our total return is close to 46,000 euros at the moment. Needless to say, I'm very happy we kept investing instead of holding a large portion in cash or bonds as many other people did this year, in most cases because of the higher interest rates or recession fears. By the way, you can find the best low-cost brokers we use for ETFs in the description below, which is a great way to support me if you'd like to. And while you're there, don't forget to tap the like button if you enjoy videos like this and to subscribe if you haven't yet. Okay, now let's get to a question you might be wondering about. Since many broad-based low-cost ETFs, like the Vanguard FTSE All-World, are basically at their all-time high again, is now a good time to buy more shares, or is it better to wait for a pullback and lower prices first? Obviously, I don't have a crystal ball and nobody can successfully predict how the market is going to move in the short run. Luckily, you should have a time horizon of at least 5 years, ideally 10 years or more, when investing into ETFs anyway. But we can still look at some data to help us make a decision. Since the global stock market historically trends upwards, it's completely normal for a diversified global ETF to be at or near all-time highs a lot of the time. Research by Dimensional Fund Advisors titled All-Time High Anxiety, which I've already mentioned in another video a few months ago, points out that since stocks generally yield positive returns, reaching new highs is something that happens regularly. For instance, the American S&P 500 index hit new highs in over 30% of the months in a 94-year period ending in 2020. Surprisingly, the research also revealed that average annualized returns for the S&P 500 were actually higher in the 1 to 5 year periods following new highs compared to periods after a 20% market decline. As you can see, at least based on historical stock market data, there's no reason to be concerned when the market is at record highs. I've also been buying ETF shares at or near all-time highs myself quite frequently since 2017. You can see those periods marked with red arrows here. And looking back, I'm really glad I didn't let all the negative news headlines or the fact that we were often sitting at record high prices stop me from investing on a regular basis. Otherwise, I would likely still be waiting for the right time to get back into the market today, and we would be a lot further from reaching our early retirement goal in a few years. And if you're worried that ETFs have gone up a lot this year, you should also remind yourself that we were down minus 13% last year, so we simply recovered from that drop, and we're just now reaching November 2021 prices again. Which in turn means that this rally could be far from done, especially now that interest rates seem to have peaked and rate drops by central banks are becoming more and more likely in the coming months. This could have a positive impact on asset prices. Anyway, no matter in which direction stocks move, we're planning to stick to our simple investment strategy where you just buy a single ETF, the accumulating Vanguard FTSE All-World, every single month. But I'm curious to know what you're doing right now. Are you waiting for a pullback or buying more shares as if nothing changed? Let me know in the comments. Moving on to the low-risk portion of our portfolio, as in high-yield savings secured by a 100,000 euro bank deposit guarantee, We earned 44 euros and 73 cents in interest on Trade Republic last month, since they're paying 4% interest per year. Which is great, since these cash reserves would otherwise just be sitting on our Austrian bank accounts earning zero, while our banks pocket the 4% difference the ECB is currently paying them at its deposit facility. Okay, let's move on to my investments in peer-to-peer lending. As always, you can find links to any platform I mentioned in the description below, in case you'd like to check them out and support me. Let's start with my monthly overview. I earned a total of 352 euros and 46 cents in interest in November, making this a very good month. According to Portfolio Performance, that's a respectable monthly return of 0.84% and an internal rate of return of 9.41% from peer-to-peer lending this year. Now let's take a look at my active investments in peer-to-peer lending individually. Beginning with Mintos, where I had my best month in almost 3 years with over 79 euros in interest payments. After launching bonds in October, the peer-to-peer lending marketplace is getting ready to launch ETFs next. So I'm curious to see how this is going to be implemented, perhaps already this month. From what I can see at first glance, I'm happy that they seem to have selected some solid low-cost options. Next is Esketit, which also had a great month with over 71 euros in interest. As I mentioned in my last video, I stopped my Jordan auto invest for now and I'm reinvesting everything into other Group loans. Luckily, it seems like loan supply is not an issue anymore on Esketit, with me staying fully invested. Meanwhile, my earnings on Via Invest reached new highs as well at over 55 euros in November. Income Marketplace also had an excellent month as far as interest payments are concerned, my second best so far. Right now, a large portion of my portfolio is invested into ITF and Dana Rupiah loans, since those are the only ones that are still paying 15% per year right now. I'm still hoping that they'll be able to onboard new lending companies soon, so that I can diversify a bit more on the platform. Next up is RoboCash, which ran smoothly as usual. And lastly, Lande, where I invest into asset-backed loans in the agricultural sector, which had a below average month with 28 euros in earnings. But then again, not all my loans pay on a monthly basis here. So yeah, that's everything I had to share on my active investments in peer-to-peer lending. November wasn't all that exciting compared to what happened with stocks or ETFs and my last asset class. Speaking of that, let's finish things off with my most speculative, high-risk investments in the two crypto assets Bitcoin and Ethereum. Both of them have been rallying like crazy lately. Bitcoin was up 5.8% in November, pushing its 2023 performance all the way up to 128%, and Ethereum was up 9.8% in November for a year-to-date return of 71% so far. They've actually been rallying even harder since the start of December, but since things can move around just as quickly in this crazy market, we'll see where we stand by the end of the year. Needless to say, I'll be forced to do some rebalancing this month, since they've now grown far beyond my target allocation of 10% of my overall portfolio. Alright, that's it for this month's update. If you enjoyed the video, don't forget to tap the like button and to subscribe if you haven't yet. Also, if you'd like to support me and check out anything that I mentioned in the video, feel free to use my links in the description below. And of course, none of what I talked about today was meant as investment advice. I'm just openly sharing my opinion based on my personal experience as an investor. Thank you guys so much for watching, have a wonderful day, and until next time.